Hello and welcome to the Joe Ligato Show. I'm your host, Dr. Joe Ligato, and today we're going to be reviewing a couple articles talking about the financial situation in the United States, its trade war with China, what's happening with de-dollarization around the world. And so the first article we're going to look at is from Yahoo Finance, and it's on how China sells the most U.S. assets in 4 years, dumping $21 billion of U.S. stocks and treasury bonds. Okay? So this is a big deal because it means that countries and businesses, organizations, people are losing faith in the United States dollar. And so the article starts off talking about how Chinese investors offloaded $21.2 billion of U.S. assets in the month of August, the most in 4 years, according to the U.S. Department of Treasury, data cited by Bloomberg. Dumping of U.S. securities comes as the onshore yuan weakened in August to its lowest points in November, fueling speculations. Beijing is looking for ways to prop up its currency. Most of the sales were in the U.S. Treasury bonds and stocks, and China funds also slashed agency debt holdings, the report said. According to Bloomberg, the pace of U.S. asset sales by investors in China led some on Wall Street to theorize that officials in Beijing were looking for ways to further prop up the weakening yuan, selling their U.S. bonds to increase their store of dollars that can be used to intervene to boost the currency. China's economy has failed to rebound as expected from the COVID-19 pandemic. I don't know about that because they still have far more growth than Western countries. So China seems to be doing pretty well for itself. It even handled the real estate crisis that it had far better than the Western real estate crisis. I mean, look at the evergreen crisis in China and how it had very minimal impact on China and on the world economy versus, say, the United States whenever it had a real estate crisis in 2007, 2008, and it destroyed the United States, created a huge recession, and then it destroyed the rest of the world too. So when China has problems within its country, it handles them in a very efficient manner that barely impacts their own country, let alone other countries. Whereas when America faces a similar real estate crisis, it destroys everyone. They do a terrible job of it. I mean, that's an excellent comparison. That's an excellent example there. I'm glad I thought of it, so I'll just pat myself on the back. Yep. The U.S. bond market, meanwhile, has seen a strong sell-off over recent weeks from investors around the globe. The U.S. Treasury, 10-year Treasury yield is hovering near 5%. It's high since 2007. You don't want to have any comparisons to 2007, 2008, the recession there. So that should be very concerning. The strategist at Barclays said this week that investors shouldn't expect that to come down anytime soon, except in the event of some financial shock or recession. Okay, so something to comment on here is the United States has already been in a low-grade recession pretty much since the pandemic started, and it isn't even anywhere near its worst yet. Like, United States right now is keeping itself afloat by printing as much money as possible, a ridiculous amount of money. And that eventually has to end. Like, they can only print so much money before demand for the dollar ends up going down quite a bit. And you're seeing a ton of countries moving away from the dollar. You're seeing places like Saudi Arabia, I believe Thailand pivoted away, Indonesia, Malaysia. Like, they're all just trying to get away from the US dollar. And so, like, if you think things have been bad for the past few years, and if you feel like the United States has been in a recession, which half of Americans do feel like the United States has been in a recession, it's going to be orders of magnitude worse once the actual recession hits, because this is just the United States keeping the dollar afloat. Like, this is their essentially best case scenario given the hand that they currently are holding. So anyways, I'll just move on from there. The hurdle for a bond rally is still high. Despite data continuing to show a resilient economy, the consensus still expects it to slow very sharply over the coming quarters. Repeated misses beg the question whether the consensus has been overly confident about monetary policy being too tight. We argue that policy is barely tight and risks are skewed towards continued upside surprises. Okay, so yeah, China selling off a ton of U.S. assets. They're losing faith in the United States dollar. We have another article here from Business Insiders talking about how the greenback is losing some influence in the oil markets, which I just started to touch upon. And it means a partial de-dollarization is likely, says JP Morgan. So people are talking about this nonstop. The United States dollar is just not working particularly well right now. Countries are uncomfortable holding on to it. They're uncomfortable with dealing with the United States at all because the United States at any time can take any country or any organization's assets, freeze them, steal them, et cetera, like they've done with Russia, like they've done with some Chinese companies, like they're doing with Iranian companies, et cetera, et cetera. So some highlights from this article: the US dollar is losing some influence in the oil markets. The correlation between the US dollar's strength and oil prices has weakened per the bank's research. So again, the petrodollar is what's keeping the dollar afloat, that trading oil for the United States dollar, and that's going away. This is because more oil is now being transacted in non-dollar currencies. amid a broad discourse. Oh, and I should mention here that the reason that's like why countries are doing this, one, they just don't trust the United States anymore. But two, if you're producing things, you have a lot of faith in your currency being of value because other countries can trade your currency back to you for the various goods and services that you're producing. And so if you're a producer country, then trading in your own currency is very valuable because there should be demand for your currency because you're actually producing a lot of goods. Okay, so amid a broad discourse about the waning influence of the United States dollar, analysts at one bank see one commodity market starting to shy away from the currency while analyzing the dollar's correlation to international crude prices. Their report says that the greenback's importance could soon diminish. United States dollars diminishing in terms of its trade on oil reserves. Okay, so we see some statistics here between 2005 and 2013, a 1% rise in the US trade weighted dollar, which measures the value of the greenback relative to a basket of other foreign currencies, will cut the price of international benchmark Brent crude oil by about 3%. However, Brent crude oil prices fell just 0.2% with a 1% rise in the US trade weighted dollar between 2014 and 2022, pointing to the greenback's waning influence in the commodities trade. This trend is because more oil is now being transacted in non-dollar currencies, such as the Chinese yuan. Indeed, major energy buyer China has been using the yuan for almost all of the Russian oil it bought over the past years, Reuters reported in May, citing multiple trading executives with direct knowledge of the matter. Okay, so again, like I talked about, this is a real example where China produces a lot of goods, they manufacture a lot of things. They want to trade their currency to other countries so the other countries can purchase their goods using that yuan. Like that creates extra demand for their currency and it creates extra demand for their products, their manufactured goods. Russian oil, now subject to international trade restrictions, which has not worked whatsoever, is also being sold in the local currencies of the buyers or in the currencies of countries that Russia perceives as friendly. Overall, we find that the importance of the US dollar has declined significantly from 2014 to 2022. It's hard to ignore the shift, even if it's due to the dollar strength post-pandemic and geopolitical tensions, such as the Western-led sanctions against Russia over its invasion of Ukraine, that are making other countries aware of potential consequences of crossing Washington. So again, I talked about this before. The United States has sanctioned other countries before. They've frozen their assets, they've stolen their assets, et cetera, et cetera. The thing that makes Russia different is Russia has withstood those sanctions and has not only survived, but I like to say thrived due to the sanctions because they're creating a lot of domestic industries instead to replace what they lost from the West. And so we're seeing a lot of extra confidence in other countries because they think they could also survive the sanctions if Russia was able to survive sanctions. So to be sure, the US dollar is still maintaining its dominance with its share of general usage via the SWIFT payment system at over 40%, much higher than the euro at around 25%, the yuan at around 3% in July 2023. So we've seen increasing indicators that the United States is trying to cannibalize the euro before the United States dollar collapses. And so you're seeing a decline in the euro usage versus a decline in the US dollar because the United States is using Europe and the euro in order to make sure that they can prop themselves up as long as they possibly can. And that's why the euro is collapsing. That's why the European Union's economies are collapsing. Why they're deindustrializing. It's because the United States is cannibalizing them. What a way to treat your allies that have been subservient and loyal to you, right? Okay, so marginal de-dollarization is taking place, JP Morgan says. But again, this occurs linearly until it all happens at once. And so there's going to reach a point where trust in the dollar is so low that people just opt out in mass. And in some instances, we'll call that like a tipping point. We might call it a black swan event, et cetera, et cetera. But there's going to be a ledge. And we're quickly reaching that ledge where people just don't trust the United States dollar anymore. Okay, so they go on to say it's not the first time the banking giant called for the trend of de-dollarization. So talked about JP Morgan in June. The bank's analyst said that some signs of de-dollarization are emerging as the dollar's share in foreign reserves fell to a record low. JP Morgan noted in its Thursday report that the dollar's share in foreign reserve volume has fallen to a record low of 58% in 2022 from 73% in 2001. Wow, that's a pretty steep decline. But again, they're trying to cannibalize the euro to prop their own currency up as much as possible. And it's still not working. They're still declining almost 20% there, like 15%. Okay, so the article ends by saying JP Morgan did not immediately respond to a request for comments from insiders and outside regular business hours. All right, well, that's interesting. So if you found this information on the economic, financial situation of the world, the de-dollarization occurring, to be of interest, to be important, please give us a thumbs up. It helps us in the algorithm. Please subscribe to our channels on YouTube and Rumble. We are being suppressed. We want you to have access to our latest content. We're producing videos every day. Please leave us a comment in the comment box below, questions, concerns, critiques you might have. Thank you for watching, and I hope you have a good rest of your day. Bye.